my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here are your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. Okay, so you could call it a bullish harami yesterday or an indecisive spinning top instead of, or as well as, and you'd be right on both counts. However, I would prefer just call it a simple, small, bullish white soldier that was an obvious reaction to last Friday's strong key reversal down. That was halted, and in the case of yesterday, reversed by the combined support on approach to the old neckline of the January to February reverse head and shoulders pattern, currently at 120.78, and the rising short medium moving average, currently at 120.77. This is the first halt to the recent decline prompted by the shooting star pattern type 1 bearish that we saw last week. A little below we have the flatlining medium moving average, currently at 120.40. I'm always suspicious of flatlining moving averages. They tend to have a greater potency. So far today, continuation to reactionary pull back up, moving up towards the not so strong March 2018 low at 121.52, but then rejecting it so far. Cable, aka sterling against the US dollar. Hammer pattern yesterday, usually seen as bullish. It was in part a follow-on to Friday's bearish engulfing pattern, as the whole of the handle of the hammer dropped down to the key 140.75 support stroke resistance level before pulling back up. Prices did not approach the overhead resistance from 141.43 or the nearby flatlining short moving average, currently 141.50. As I say, I always have a suspicion that flatlining moving averages are usually more potent than those at an angle. Anyway, we've not ventured outside the recent ranges now for over 4 weeks. Overhead, we still have the resistance from the March 2018 high at 142.43. This is part of the well-publicized trio of resistance and occasional supports of 140.75, 141.43 and 142.43. In a bigger picture, this is just the latest moves in how the current bullish forces, evident since September of last year, still battle and rub up against the latest challenges seen overhead. In this case, the trio of what had originally been overhead resistances. Overall, the market still continues to travel higher between the lower time below, currently 139.65, together with its long-term partner, the medium moving average, currently at 139.32, and its short-term partner, the short medium moving average, currently 139.97. Whilst above, we also still have the middle time, currently at 144.24. Both times are from the June to September 2020 bullish shift pitch walk. Please always remember, this pitch walk has given the bullish angle of attack of this market since September of last year. So far, well, initially nothing. We were either side of yesterday's close, but we seem to be now testing down to the 140.75 area. Interestingly, if we keep on going like this, we could actually end up with a key reversal down if we're not careful, so just keep an eye on that one. Euro sterling, a bullish white soldier yesterday. Almost, but not quite, a bullish engulfing pattern. However, the action was still within the recent May to June possible roof pattern, sometimes known as a half diamond pattern. The top of the action once again hung from the short moving average, currently 86.05, and a nearby broken downtrend, currently at 86.03. That makes up the second part of the roof pattern. Overall, the gentle move lower has been prompted, as I've repeatedly mentioned, by the descending medium moving average. That's currently 86.40, which is now well below what had been the prior overhead resistance, the April 2020 low at 86.69. Meanwhile, below we still have the extension of the flat trend line from the March-based descending triangle at 85.45. Now, I've spoken for a while now about this roof pattern, known sometimes as a half diamond, for the action from the start of May until today. So, taking this further, with a possible target X as a downside target for this roof stroke half diamond pattern in the 85.25 area. I also could put a preliminary target in the upside, as their patterns can break in both directions. However, we have not as yet had a confirmed break up and out of the downtrend for the roof, yet I can give an idea of the size of the break should it happen, when it happens. It will be about 55 ticks on top of the break of the trend line. if that happened today, it would be in the 86.58 area, even though I have not marked it on the daily chart. Now, so far today, continue to temp higher. We're testing the short moving average and the downtrend, and we've punched through it. They've capped the market in recent days, so it'll be very interesting where we close tonight. And don't forget about short medium moving average that's flatlining, and above that, the medium moving average, which is constantly heading parallel lower to the downtrend, the broken downtrend line. US dollar against the Indian rupee. A higher but still bearish black crow yesterday, as the key reversal up on Friday met the overhead resistance of the flatlining medium moving average. That's currently at 73.28, and the market stalled. More suspicious of flatlining moving averages, I believe they have a greater potency. Well, in this case, we not only have the flatlining medium moving average, but a little above that, we have the flatlining long moving average, currently at 73.46. Just remember, this medium moving average capped the market last week. Now, as a counter to this, I mentioned 2 weeks ago, a pullback up from the big fall between April and May could see a move as high as 74.40 area and still keep the bearish incentive. However, there's a lot in the way between there and here. Now, so far today, slightly higher open, test up to the medium moving average, where it initially got stuck, but now seems to be punching its way through, though where it closes, or if it manages to breach really properly last week's high, is a big doubt to me at the moment. If it closes below the medium moving average, then obviously that's still there and acting as resistance. And don't forget, we have above that the long moving average, which is also flatlining. US dollar against the Brazilian real. A reactionary combined bearish Harami and bearish double yesterday, as the recent build up from last week's daily key reversal up for a move higher stalls. This relieves the pressure somewhat on target X in the 482.80 area. This is a very provisional and very preliminary target for the whole mid-April today action being a possible bearish halfway hesitation pattern. This move up on Friday questioned that potential target, as we have a number of lesser support levels below at 510.87 and 505.73, as well as the December 2020 low at 500.93 that halted the fall last week. Now the actual 510.87 is now resistance, and 505.73, well, that is support, but it was almost resistance as well. Overhead, well, we're in fairly free territory with only the short moving average currently at 517.02, lesser Fibonacci lines at 520.27 and 525.67, though we do have some early May base congestion between 521 and 3/4 and 523 and 3/4. US dollar against the Mexican peso. A second bullish white soldier yesterday, and not really a follow-on to Friday's key reversal up. Action was inside Friday's range, and all it managed to do was close over the broken May base downtrend currently at 1990.90. The top was still capped, as on Friday, by the combination of February to April head and shoulders neckline currently at 1999.25, and the short medium moving average currently at 1997.64. Now, I suspect the short medium moving average was the more potent of those resistances. Unless there is some reason to keep it, I will retire the downtrend today. Below we have some congestion in 1988.60 and especially the 1985 even areas, though to be honest that hasn't shown up in recent days. The key support below is obviously the 1971.68 area. So far today, seemingly still capped by the short medium moving average and the neckline, though also not willing to venture below the flatlining short moving average, currently at 1988.66. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.